Welcome to The Explainer. So, if you run a fixed income desk, you know your trading platform is basically the heart of your entire operation. But what happens when that heart is also your biggest headache? Well, today, we're going to break down the business case for modernizing your firm's trading ops. We're going to figure out when it's time to ask that big question. Is your platform actually worth what you're paying for it? All right, let's just jump right in. For a lot of small and mid-sized fixed income desks, this really is the central question, isn't it? I mean, you know the deal. Margins are getting squeezed tighter and tighter, but the costs and, frankly, the complexity of the tools you absolutely have to rely on, they just keep going up. It creates this really tough situation, this squeeze, where you've got to wonder if your core tech is actually a strategic asset helping you win, or if it's just a drag, slowly eating away at your profitability. You know, there's actually a name for this problem. People in the industry call it the legacy tax, and it's exactly what it sounds like. It's this hidden price you're constantly paying for using these powerful, but let's be honest, oversized and really rigid platforms. The thing is, they were designed for a totally different era, for a much, much larger scale. So now it's just this constant drag on your profitability, on your efficiency, and maybe worst of all, on your ability to just adapt and be nimble. So let's break down what that tax really looks like. It usually shows up in three core areas, three real pain points. First step, the costs. They're just high and getting higher. You're paying this big firm price for a tool that's not really scaled for your business, and it eats right into your P&L. Then there's the operational friction. This is a big one. Your workflows are probably spread all over the place, multiple systems, different portals, and of course, tons of spreadsheets. And finally, there's the inflexibility. You're basically locked in. Any change you want to make is slow, super expensive, or maybe just flat out impossible. And this really hits the nail on the head. You're paying top-tier, premium pricing, but your team is still relying on spreadsheets and just people to glue everything together. Think about that for a second. It's the worst of both worlds, right? You've got the high cost, but you've also got all this high manual effort. It just doesn't add up. Okay, so that's the problem. What's the solution? How do we fix this? Well, a modern approach isn't just about finding a cheaper alternative. It's about a totally different, a fundamentally better design. The goal is to create a central hub for your operations, something that lets you keep control but lose all that financial and operational drag. And the core idea here is really simple, but powerful. It's about creating one single continuous flow. Just imagine, from the moment a trade is executed on an ECN, it just flows. It goes to your custodian, it goes to the regulator, all in one seamless process. No more manual steps, no more spreadsheets. You end up with one source of truth for the whole business. So how does this modern workflow actually function? It's really a simple, logical, three-step flow. First, the system ingests all the trades from your ECNs. Then the TMS engine gets to work. It processes everything. It normalizes the data, enriches it, reconciles it automatically. And finally, it delivers. It pushes out real-time positions, your P&L, and all the reports you need to your custodians, regulators, and of course, to your users. And the features that power this are designed to directly attack those pain points we talked about earlier. So instead of your team juggling a bunch of files, you get a single trade blotter, just a simple red, yellow, green status. Easy. Instead of wrestling with some monster Excel spreadsheet for payouts, all that complex logic is just automated right there in the system. And compliance? It's not some bolt-on afterthought. It's embedded from day one. Okay, that all sounds great on paper, right? But the real question is, what does this actually mean in practice? What's the real-world impact? Let's move from just talking about features to looking at some measurable business outcomes. First off, let's talk about speed. We all know month-end closing can be a nightmare. It's probably the biggest source of manual work, and let's face it, late nights for the ops team. With an automated system, that whole process gets radically faster. We're talking payouts with all the complicated finance charges and carryovers calculated and ready to go by the third business day. That's a huge change. And then there's the bottom line, the direct impact on your P&L. For comparable capabilities, firms are seeing a direct platform cost reduction of somewhere between 50 to 65%. Now, that is not a small number. That is serious money that you can reinvest right back into the desk to actually drive growth. When you combine that speed with those kinds of savings, it completely transforms the workday for your operations team. Think about it. The before picture is reactive, starting the day loading and reconciling files, manually hunting for fails and breaks, and constantly fielding those what's the status calls. The after picture, it's proactive. You start the day with a simple dashboard of exceptions. You focus only on what needs attention because the rest of it just works.
And traders can even self-serve their own P&L views. Game changer.
And look, this isn't just some hypothetical scenario. We're looking at a real, though anonymous, case study of a mid-sized US broker-dealer. This is exactly the kind of firm we're talking about, and they saw these exact results. It just proves that this kind of solution is designed specifically for this profile, for the part of the market that gets hit the hardest by those legacy systems.
Okay, but let's talk about the elephant in the room, risk. I mean, we're talking about a mission-critical system here. Lower costs and cool features are great, but they don't mean a thing if the transition is a disaster and breaks the desk. So, how can you actually trust a migration like this?
Well, it all starts with experience, and we're talking about a ton of it. This isn't some generic software built by a startup. We're talking about a platform that has over 30 years of deep, hands-on experience from building and modernizing trading systems for huge global institutions, baked right into its DNA. That's where the trust comes from.
And that expertise is delivered through a pretty smart, modern global model. Think of it this way. You get a US-based hub focused on client success in your relationship. That's your front door. And then you have a global R&D and operations center of excellence in India, which is like the engine room, constantly driving the tech and operations forward. And this is probably the most important part. The migration path itself is designed to be low risk. There is absolutely no big bang cutover. You don't just flip a switch and hope for the best. Instead, you do a parallel run. You run the new system side by side with your old one. This lets your team validate everything, P&L, payouts, reports. You make the final switch only when the desk is 100% ready and comfortable. You are in control.
So when you boil it all down, the value proposition is really, really clear. It's about getting a tool that's actually a better fit for your fixed income business, one that has all those critical operations and compliance workflows built right in from the start. And you get it at a materially lower cost. It's that simple.
And that really leaves us with one final thought. A question for you, really. What could your firm do with all those savings and that newfound operational efficiency? What new opportunities could you chase? What could your team really achieve if they were finally freed from all that manual grunt work and could focus on creating real value? That's the potential we're talking about here.